Hey, it's Michael Saul, but everybody calls me Tiny, and this video is why I'm getting worried, but I'm not shorting yet. This is stock market analysis for the week of October 23rd, 2017. If you would like to receive intra-week updates from me, go to www.attackthemarkets.com. Put in your first name and your best email address, then click the Sign Me Up button. Then go to the email you used to sign up and look for an email from me. Click on a link there. You have to confirm that it was actually you and not one of these evil bots that apparently run around the internet looking to sign up on all these sites. Anyway, once you do that, you'll start to get emails from me when I have updates intra-week. So let's look at the market. Once again, new highs here for the S&P 500. Not all the majors hit them, but we'll take a look. They all acted well. Thursday, the nice gap down, but nah, nobody cares. Came right back, and then boom, nice push up here. Next target for the S&P 500, I would be putting into 261 for the upside. But we're stretched here, and whenever we get stretched, what do I say? I always say the same thing. I know I sound like a broken record. If you don't know what a record is, they're these vinyl circular things used to play on what's called a record player. Broken MP3, how's that, okay? But when we're extended like this, a pullback is likely. Pullback or a pause is likely. Not a bear market, not a crash, not any of that, but a pause. That's how the market likes to look. Now, likes to move. Now, last week, I talked about this flag going in the direction of the impulse and how it could be strong. What did we do? We crept out, we faked out Thursday, and then boom, we pushed up to the highs. So I'm looking at like the 261 area for the next level of resistance. It's a chip shot from here. It's a little bit over 1%, whatever it is. So that's not a big, a big guess at, moving higher, right? A big lofty target for the S&P. But again, we're stretched. We're stretched from the 20 EMA. So you have to watch for a pullback. If you are long and strong, you want to protect your profits, it's not a bad idea to continue to trail stops. Here's the Dow. Okay, so the Dow, boom. I mean, this is looking 238. No, it's a little too high. 235, 236. But again, very stretched here. I mean, this is a concern when we get this heated. Now, is this considered, I got an email this week, is this to be considered a blow-off top? And it's not there yet. It's not absolute hysteria. I think we're going higher into end of year, but I think we're going to get a pullback that is going to be a beautiful sweet spot, nice high fastball coming down the plate, and I think that's going to be what we're going to be able to take advantage of it and hit. I also think it could get real choppy into the end of the year like it has been doing as of late, right? But I do think there's going to be a pullback. I think people are going to be teeing up on that pullback, and I think self-fulfilling prophecy or not, I think it's going to work. I think there's strong odds that we get a pullback that is buyable. So the anniversary of the 87 crash last week and all that, once again, those anniversary dates, when it happens, everybody's like, well, see, it happened on the 30th. Yeah, but what happens when it doesn't? Oh, maybe it'll happen on the 31st year, sorry. Or maybe it'll happen on the 35th year anniversary or the 50th anniversary. Oh, can you imagine the 47th year anniversary? I mean, come on, give me a break. And if you put enough lines and calendar dates on your chart, you're always going to find support, resistance, and a time signal, right? But my point is, we're stretched here, and that tells me we could pull back at any time. Trailing the stops is not a bad idea. As a matter of fact, it's a very good idea. Here's the Russell. Now, the Russell did not hit a new high. Went a little bit lower, but still a nice bull flag. Touched the 20 EMA or close to it, and then tried to pop. Did not break yet. Divergence? Yeah. Concern? Mid-caps? They pushed up to a new high, okay? And the NASDAQ also didn't push up to a new high. So now you got divergence with the Russell and the NASDAQ against the broad market. Definitely something to pay attention to. Again, I'm starting to get concerned, or I'm concerned here. I don't know if I'm starting to get, I've been concerned the whole way up. Whenever something goes this far without a significant pause, you got to be a little concerned, right? But I'm not looking at short here. I'm not saying this is the signal, this is the bear market, let's get short. I just don't see it here. I don't see any reason. The cumulative advanced decline line is at highs. I mean, it's a marginal high, but it's still at a high, right? Yeah, there's VIX issues. Oh, the VIX, right? So the VIX is low, although it almost got back to double digits, right? But I mean, you know, the VIX is kind of low. Again, that in of itself is not a signal to short. But in my opinion here, I think we have to be careful, but I also think it's not the time to try to be a hero and try to pick the top here, right? I have 3 stocks to watch, by the way, this week. I forgot to say that at the beginning of the video, but if you saw the title, you saw that. And these are stocks that are not extended per se. So if the market does continue to just sizzle, there is a opportunity for these to play a little bit of catch-up. And they're not complete laggards, but they're not exactly, you know, leading their respective groups, okay? Then there's also talk about the CAPE, which I forget what it stands for, but you can look it up if you want, but it's about earnings and how, yeah, that doesn't necessarily mean the market's going to go down. It just means that growth is going to be slower than we've been seeing, which also makes sense. I mean, growth is heated here. The market is heated. We're flying. I mean, this is... You know, and when I mean flying, I don't mean with volatility, but we're continuing to just go up. The volatility is actually pretty low. There are a lot of funds that trade off of volatility that are getting hit here and not doing good. All right. So anyway, enough of that. Let's look at the sectors. Semiconductors, right, gapped and closed lower, but on the day, but still okay up at the highs. Here's NVIDIA sitting right under 200, deciding what it wants to do. Here's Intel. Here's Clad Tanker. I mean, they all look nice, but they all look extended and that they could take a pullback before they continue, right? Here's Clad Tanker. Beautiful. We highlighted this. If you go back and look at the videos, they're all on YouTube. They're all time-stamped. It's not hindsight. I said we're going to get a move out of here, either down or up. Wait for the move. Boom. It popped out. Then what happens? We go up. We pause. We go up. We pause. We go up. We pause. We go up. Okay? That's exactly what I'm looking for in the market. I'm not looking for us to just roll over. Now, could this be a double top? Absolutely. But until it shows more of being that than just an extended market that needs a rest, you got to give the bulls the benefit of the doubt here. Banks. Banks, yeah, looks like they want to try to get the highs. Nice day on Friday. Bank of America, new highs. JP Morgan, new highs. Citigroup, lagging. And remember, Citigroup was out in front for a little bit, though. Okay, Northern Trust, Zion, yeah, they're lagging a little bit. Zion's one maybe keep an eye on if the banks stay firm. They could play a little catch-up, maybe get to $50. Here's Goldman Sachs. We're moving to brokers. Again, this is coiling up. I think Goldman is going to test these highs. Okay, so that's about, 11 points, whatever is away, 10.5. It's irrelevant. But I think it's going to get to these highs. So wait to see. Maybe it wants to coil up a little more. Maybe it wants to take a couple of days pause. Then you could draw the lines around it. Or I'll just show you. I mean, these lines are not valid because we haven't, they're valid for now. But I'm thinking maybe it pauses even a little more. It fills in a little more, and then it could try to pop. All right, here's Morgan Stanley up at the highs. All right, here's the broker-dealers in a bull flag. So if they kick in, watch that Goldman. Man, maybe Goldman doesn't pause. Maybe Goldman's ready to bust right out of here. But I would love it for it to coil up because then you can quantify it better. You can wait for the breakout. You know where to put the stops on the other side of it, etc. You can do that here too, but I don't know. To me, it looks like it's still trying to find its way. Just keep your eye on it. Keep your eye on Goldman. How about biotechs? So biotechs, yeah, they popped up to a little new high, and then they pulled back. So you got Biogen on the pullback here a little bit. You got Gilead still putting in this right here. So you want to watch this right here. Looks like it could be a bull flag if the biotechs tend to decide to get strong. All right, how about the glamours that we like to look at? Amazon, yeah, can't really stay above 1,000 for long. Uh-oh, does that mean it's a short? Nah, it doesn't. But it's just an amazing company. I mean, more and more I read about Amazon, the more and more I realize how just, what a mission Bezos is on here. And, for some retailers, it's the death of them, right? But for others, it'll help them flourish. Anyway, a different video for a different time. But anyway, here's Amazon back under 1,000, but still above its 50-day moving average. And you got the 20 EMA, kind of more sideways than anything. Apple is not exactly the strongest looking pattern, but it's, again, is it a short? I mean, you do have the lower high, but I don't know. I'm not looking to short it. Here's Alphabet. Hit the new high as we expected. Now it's pulling back. What does it do from here? Netflix pulling back to the 20 EMA. How about the Tesla? Yeah, the Tesla with all the layoffs. Oh, they laid off hundreds of workers. I mean, it got hit Friday a bit, but again, still hanging in this range here. The Facebook popped to a new high. Now it's kind of pulling back. See what it does from here. Caterpillar coiled up. Looks like that's going to go. John Deere coiled up. See if that could pop up and hit this, take out this high up here in the 132s. Another one we highlighted a few months back. All right, gold. Yeah, gold has turned sloppy. Thought it was going to get a chance to dig its heels in and get going. It's gotten a little sloppy. It's got to get through this last high, which is up here at 123.86. If not, look for a retest down to the 20 EMA. Here's the gold miners. Now, the gold miners, my good friend Mike Swanson, he always says to me, people get interested in GDX when it gets over 24. Look how we went right to 24 and reversed. I mean, and I've been saying this for months, so it's not like, oh, by the way, convenient that it turned to 24. Because, no, I've been saying this. You can go back and watch the videos, right? I say it all the time, Mike, and that's why I like him, First of all, he's one of the most honest guys in this business. I don't know if most honest. I don't know if it's a variable degree, but he's an honest guy in this business, right? He gives the winners, he gives the losers, he gives his opinions, and he backs it up with what he's seeing, right? And that's why I like him. But he also has these nice little tidbits. It's like the same thing with Paul and all that. If you guys know me with being with Paul for a while, it's the same thing. You got all these tidbits and information. But anyway, I like that the GDX look right here. See if it gets over 24. If it loses a 20 EMA, look for it to pull back. Could go down to 21. How about oil? We use the USO. I use the USO for oil. And it still looks like it may be carving out a complex C wave here. Right? You got a triangle-like pattern right here. See if this could pop up. And then finally bonds. And a lot of people calling for a bond rally. I'm starting to look the other way here. I'm starting to look like this was its best effort. If we give up the 20 EMA, I think bonds could go back down to the lows here, to the late 2016, early 2017 double bottom here. I'd watch bonds here. I think there could be an opportunity. You could play the inverted ETFs. There's even leveraged inverted ETFs, etc., that you could take. All right. So let me recap. I think we're going higher into end of year, but I think we're getting a pullback first. I think that since we're at new highs, we have to start really being careful here. That's why I'm concerned. We're getting stretched. I don't think we are stretched, pardon me. I don't think it's a new bear market. I don't think it's a huge crash. So if you're long, yes, trail the stops up. Now, let's look at some laggards that are still acting okay, but perhaps could take advantage of if the market continues to go. So first, let me look at this index. It's the ITB, right? It's iShares, so you could trade it. It's the U.S. Home Construction Index. There's a lot of nice looking stocks in this. You can go through it at your leisure, but I picked out a couple from here and the home builders. The first one is Lennox International. Okay, so it's an industrial sector, diversified industrials. You see how it's still acting okay. You can't say this is a bear market, but it's lagging. It's not up at the highs. Got a little bit of a flag-like pattern. Don't really like calling this a bull flag because it's in this bigger range, but it is a consolidation. Can watch for it to see if it breaks. Second one is Home Depot, which is a bull flag, up at the highs. Again, lagging a bit, not super lagging. Obviously, look at what the stock has done, but it's in a bull flag here. And then the final one is this Floor and Decor Holdings. They have 100 and something stores over 17 states. I was reading all about them. So this one's lagging a little bit, but look at this triangle. You got, it looks like it was a recent IPO back in April, came up, came down with a higher low, and now it's looking like it's trying to make its next move. Like if you play the FOMC day, which I know this has nothing to do with that, but it's just so cool how these types of patterns tend to repeat, right? First move, second move, and then you're waiting for the third move here. Well, you think, oh, it's just going to go up. Well, not necessarily. But if it does go up, this could be one to get on board. Questions, tiny@attackthemarkets.com. Give me a like on this video. It helps me move up the rankings. Sign up for the email list at attackthemarkets.com to get intra-week updates from me. I will talk to you through email or in next week's video. Have a great week.